And there you have that. And there you have that opening bell on Wall Street to kick off what will be a very eventful and busy week. Of course, all eyes remain on the Russia-Ukraine war, this new wrinkle to markets that is the manufacturing shutdown in Shenzhen as China deals with a fresh break of COVID cases. And of course, the Federal Reserve meeting. And Jared, off of that, let's put a little spotlight here on Deutsche Bank. Now, they came out here this morning and they said that they are shutting their Russian operations. They weren't going to do that originally, but Deutsche Bank and Focus, and of course, all the banks this week, as the Fed is likely to raise rates by 25 basis points.
That's right. There's a lot happening here, and a lot of it does have to do with the Fed and, of course, the Ukraine conflict. So let's sort it out on the Wi-Fi Interactive. In the upper left here, you're going to see we have Deutsche Bank. That stock is up almost 8.5% here. We don't really see the big banks move this much that often, but really an impressive move there for that particular bank. But bringing it back to the discussion of the yield curve, there's been the yield curve has been flattening. The 2s 10s, that's the spread between the 2-year and the 10-year, has been crashing actually to 20 basis points. Now, there's a little bit of relief that we're getting today and over the last few days. So I think that's boosting the stock here, these stocks in the early going. But you take a look at what's happened year to date in a lot of these larger names. JP Morgan down 18%, Goldman Sachs down 13%. As far as the value trade is going, and we saw value take off late last year, it's really just been crashing recently. So that trend we're going to have to see if it continues in this rising interest rate environment. Of course, we're going to have all those details on Wednesday with that big Fed decision, Brian.
Jared, what else are you watching here? For me, I'm still watching Affirm. The stock opened here. It is tanking despite the company's guidance. CFO Michael Linford telling us here this morning that they're still seeing strong consumer demand. The market sees otherwise.
Yeah, it's an interesting story, and I don't want to get too idiosyncratic about it and extrapolate for the general market. I will say payment companies have been under a lot of pressure. And let's take a look at the Wi-Fi Interactive, because I do have our payment heat map up here where we're seeing some green. So a lot of this is tied to the financials being supported here by the expanding yield curve. But you take a look at MasterCard. This is a stock that's been a high flyer a couple of years ago. Let's take a 3-year look so we can see the entire pandemic. A lot of these companies took off in the initial burst of enthusiasm here as the world was recovering, but it's traded basically sideways for a year and a half. So a lot of these bigger names have been falling off. You take a look at PayPal, that stock has been under a lot of pressure. This is one of those bulging bicep charts, Brian. It looks like
of course it is.
Giving back all of its gains over the last 3 years and then some. I mean, just look at the 1 year on this. It's down now 62%, probably about 70% off those highs, Brian.
The deflationary biceps indicator. Jared, thanks so much for really ensuring that is crystallized in the minds of technical traders out there.